see. So first thing we're going to be looking at is DXY. That's the first thing we always look at. You're in the market, you know, on the weekends, because it lets us know what really happened over the week with the markets and what really happened with the dollar, because that's like the major pair that you should look at most of the time, because that's actually what moves the market, and that's actually the most volatile pair, the most traded thing in terms of securities in the world. You know, the currencies are the most traded thing. That's why it has the biggest market cap in the world. It has 6 trillion market cap every day. That's a daily market cap. So indices, it has about I think a 50 or 60 trillion overall. When you include all the indices in the world, that means all the stocks in the world. But 6 trillion is a per day market cap for you forex, because the amount of momentum we see every day. So for it to so for it to really, and the most of the about 30 to 40% of the market cap is owned by dollar pairs. That's why dollar is such a major impact pair that everyone usually uses, trades it. So first thing, we're going to look at DXY. So DXY, we can clearly see that, has been quite low. If I just zoom out, I've said on my daily watch list as again, that is about 2 years low. So which is around here right now. So overnight, yesterday when the market closed, we did see some kind of bullish momentum. On a daily time frame, you can hardly any see bullish momentum. This is the candle that closed yesterday. So you can clearly see that it formed the doji. So if I go to 4-hour time frame, it'll be easy to see. So that was the momentum yesterday. Form the doji on a daily time frame. On a 4-hour time frame, we can clearly see that it's above this trend channel, the 4-hour trend channel support level, so it's above it. What do I think is going to happen is most likely we are going to see some upward momentum in coming days, because it was clearly very heavily oversold, way overly sold that should have been. And if something like that happens, that's just a strong signal for a market to move up. And we can clearly see that this is still a very strong oversold on a daily time frame, which is a very strong signal and a very perfect chance for buyers to actually come in the market. And buyers, not retail buyers, institutional buyers such as banks, hedge funds, big institutional traders out there that move the market. So this is a very good chance for them to come in the market, because dollar won't be this low. I do not think dollar will be this low in New Year. I think dollar will actually start to move up from now on, as the more and more clarity comes out from coronavirus pandemic. And you must have seen how pound rose on the clarity of coronavirus and the vaccine being approved in UK. All that give a lot of clarity in the UK and pound. So pound rose quite strongly, and once that happens with dollar, that's exactly what's going to happen. Once the US get clarity from the coronavirus cases that are going through the vaccine, if they approve a vaccine, that's going to be a really positive sign for dollar. And I do think dollar is going to be really, really bullish in coming into New Year. I think New Year, January, February will be one of the bullish months for dollar in a very, very long time. So we could see a V-shaped recovery. So a V-shaped recovery, basically what I mean by that, you can clearly see this is a 1V. So this came down. Let me just get my tool here. So we can clearly see that dollar is falling like this. So we can clearly see the dollar is falling like this. We can clearly see that, right? So what I mean by V-shaped recovery is that it's going to go up like that, basically like that. So it's going to be a V-shaped recovery, and usually that is very common. And usually in trading, when the market moves down a lot, it also moves back up. So I do think dollar is going to be really, really bullish in coming few months in New Year. So overall long-term prediction for dollar is I think dollar will go back to highs of, I do expect dollar to be by this level of 98.20 by end of February or by end of March. I do think dollar will be around, back to highs of 98.12, which is just about the 61.8 Fibonacci resistance level on a long-term time frame. On a short time frame, if I go to a short time frame, all I'm expecting in, let's say, next few weeks is dollar to go back to the highs of 91.61. So I do expect dollar to rise about 100 points or so and retest this trend channel resistance level, or even it could rise to retest this 50 MA resistance level of 91.38. So, dollar is looking bullish. I do expect, dollar to start making some move upwards because it's quite low. Again, it would not, I do not think dollar would like to end this year on a low on the levels of 90. I do think dollar would like to get back into these highs of 90s and 91s. So that's the analysis for dollar for coming few weeks before the market really closes out for the Christmas holidays. So major pair. Again, the most major pair in trading is, as everyone knows, is EURUSD. It's not the most volatile pair if you compare with other pairs, but it's one of the most major pairs. Is the most traded pair out there. So after GBP is the second most traded pair, but euros is the most traded pair. So euro currently, as we saw yesterday, for the past few days, has been rising quite strongly. So since 11th of November, it has started to rise, and has been just rising and rising. And yesterday, we did see kind of a bullish momentum, but as I said, euro is testing a very strong resistance of 2 years high. So it's very, very rare for a pair to actually break above 2 years resistance. There's always kind of a pullback, and we did see that pullback. We did see about so if I just zoom out and I go, it was yesterday, 4th of December. So we did see a pullback from 1.2170 to all the way back to, it went to 1.2107, which is about 70 pip pullback. So we were expecting, we did expect a pullback of 70 to 80 pips, because there was a correction. There was a massive correction needed, because on a daily time frame, again, exactly what's happened with dollar, it was quite low, and exactly what happened with euro, it was quite high. It was really severely overbought, and that's why we saw Europe getting corrected at least 70, 80 pips. I do think there's more correction to be done. I do not think that euro actually just going to rise from here. I do think euro has got really, you can see this drop. So as I said, V-shaped recovery. So it could be a V-shaped drop as well. So going up, then dropping, inverted V-shape, basically. That's why I call it. So, it can go as low as 1.2043. But again, I do not expect euro to actually go that low. Because there's only some weeks left in trading. Maybe, yeah, by end of February, could see euro go back to lows of 1.2042. It all depends on two things: Brexit and how coronavirus vaccine works. If there's any side effects in the normal public from this coronavirus vaccine, it's actually going to send all the pairs in the world tumbling down, guys. And the only pair that's going to rise is dollar, because dollar is a safe haven currency. It's like a safe haven asset in the world. So if anything goes wrong in the world, first thing that most investors buy is dollar, because dollar is the currency of the world. So if something happens to the vaccine, and if the coronavirus doesn't get treated from this vaccine, then we are going to see a really, really massive losses in gains from euro and GBP. So I do think euro most likely is going to come back as low as 1.2094, or it might go back to 1.20s, go back as low as this. So in the next 2 weeks it could happen. It's not impossible. It's only how many pips down is that. So 1.21, so it's only about another 80 or 60, another 100 pips drop. So we could see euro dropping under 100 pips, maybe retesting the lows of 1.2044. And if that happens, then euro will most likely end the year quite low, after making a really strong momentum upwards. It hasn't been this high quite a long time. If I just zoom out, 4-hour time frame. Well, you can't see in a 4 time frame. So again, this last time was this high was, again, as you can see, 24th of April. So really strong momentum to end the year, but I do not think euro will close there. I did think euro will drop in coming weeks, and we'll be looking for some sell positions on euro, and and some buy positions in dollar. So next major pair we're looking at GBPUSD. So GBPUSD, again, massively went to as high as 1.35, finally broke the that's the highest it's been this year. So GP has made the new high for the year, which is amazing. If you think about it, GP is trying to break that high for quite a long time now. If I just go to a 4 time frame, you can clearly see that GP last time was this high was on 18th May of 2019 or 2018. So again, quite high right now, 1.35, but due to Brexit issue, because you must have seen in the news that Brexit deal at last minute got stopped. There are some issues they're still facing. There hasn't been a deal reached yet. So all that negativity in the market for pound has affected the market and made pound lose its gains. But, I do think pound will, by the end of next week, should be as low as 1.383382, which is about 70 pip drop, retest this support level of 50 MA. But this 50 MA is a very strong support level, because we can clearly see since the start of this month, whenever price reaches this 50 MA support level, it always rises up. So you can see 5th of November, then again 13th, 19th, 2nd of December. So we can clearly see that this is a very strong support level for GBPUSD. So if GBP does drop back to lows of 1.3381, we are going to expect GBP to rise back again. So for a short-term time frame, I think GBP is a good sell, but on longer term, if you're looking at a longer picture of the pair, I do think GBP will be above 1.4 by end of next year, or even by mid next year, June or July. I do think GBP reaching the 1.4 mark, which it was a pre-Brexit. Pre-Brexit, it was that So I do expect GP to reach back to the highs of, if I just zoom out, 1.34, so 1.4, which is this level here, which it was again on pre-Brexit. So you can clearly see that pre-Brexit in 2017, 2016, GP usually used to trade around 1.4 mark. So I do think GP will be back to the highs of those marks in by end of next year or mid next year, because GP has been low for quite some years now, and it's time for GP to move up again on a longer term, on a longer time frame. Let's see if you look at monthly chart. If I just go to monthly chart right now, so on a monthly chart, we can clearly see that GP is quite low. It hasn't been this low. So usually GP trades around levels of 1.4, as I said, but after when Brexit happened, GP is quite low. And, you can see in the monthly chart, it's just been ranging, to be honest. There's no kind of momentum. So you can clearly see that GP has been quite high, usually before Brexit, GP has actually been 1.19 against dollar. So one GP was about $2. So it could, that was again 2008 crash. After 2008 crash, GP has just been ranging between levels of 1.16 and 1.42, and I do think GP will go back to the range, go back to that range by end of next year. So I do think GP will be ranging again between 1.6 and 1.4. That's our longer term outlook for GP. On a short time frame, again, on a short term outlook, I do think GP will fall back. You can clearly see below 50 MA resistance level right now. So as the market opens Sunday evening, we could see GP drop, and overall GP should be rising and breaking above the highs of 1.35. I don't know if it's going to happen this year, but let's hope that it does that. We could see some really good momentum in GP, because GP is one of the most volatile pairs, and we love to trade GPUSD. Last pair we're going to be looking at is gold. Again, gold, from all the way back to lows of 1764, it rose nearly 80 points, which is about 800 pips in matter of few days. Actually, in 5 days, it just rose 80 points, which was expected. As I said, gold will never end its year at 1764. It will never end this year, even at 1840. I do not think gold will be ending its year at 1840. I think gold will go back to the levels of 1900 and maybe end the year at 1900. So where is 1900? 1900 is this red line with the box, which gold has been been ranging for quite some time now. So on a longer time frame, gold is moving. It's very strong bullish momentum right now. I mean, this whole week, gold has moved about 80 points, which is 800 pips, which is, very rare for gold to do that in a week. But, it could happen. It has still looking very bullish overall. Still RSI is still below the overbought zone. So that means there's some kind of still bullish momentum left. So, by end of next week, we could see gold as high as 1876. And the last week of trading, which is around, 18th or 19th December, we could see gold finally closing its year at 1900. And if that happens, that should be a good signal for gold, for commodities trader. That could mean that gold could be in new year, could rise back to the levels of 2000, which it should be, if the pandemic continues. Again, as I said, it will really depend how the vaccine really affects the coronavirus, because if the vaccine doesn't work, and if there's any side effects that a normal public faces because of vaccine, gold might just shoot back to 2000. It will all depend how the next 3 months are in terms of vaccine, how the first quarter of the year goes, when the more and more people get the vaccine, and how it affects the normal general public. Then if it's positive news, then we could see gold maybe going back to the levels of 1764, 1700s. But overall, I do not think gold will actually be below 1900 by end of this year. So that's the outlook, guys, for gold. Keeping a close eye. Might be looking for buys. We are bullish bias on gold for now, because it's been quite low, and for now I think gold is going to start making momentum upwards, and end this year around 1900 mark. Let's look at some major news next week. So we're just going to go next week now. Investing.com is the news platform that we use for ourselves, because it has really all the news, that major news of the week that has to come out. So Monday, we do not have any major news. We have IV, PMI, Canadian for CAD, but CAD is not something we trade that much. So, but it does affect dollar. So if CAD news is good, sometimes dollar gets reacted in a negative way, because CAD and USD. CAD is also traded a lot. So it's a massive traded pair. It holds low volatility, but overall, if anything happens with CAD, it doesn't really affect us that much. We do not actually trade CAD that much. Same with JPY. JPY pairs are quite volatile again, but again, we do not trade that much. But GDP, let's see how it comes, because it can affect the sentiment of the market. So if JPY pairs are bad, that usually means that there's some kind of crisis in the world, because JPY is again a safe haven currency, because it holds its value for a long time. One of the most stable pairs in the world. JPY currency. Yen is one of the most stable currency in the world. So if yen goes down, that could give us a lot of boost to dollar. So yen is going down, that means we can see dollar going up. So that could be something. If GDP is bad for JPY, that could also boost a dollar in momentum upwards. Another major news we're looking at on Wednesday is, interest decision. Again, this will be a massive news. We might trade USD CAD on that day because, interest decision is always important, news of the week. It's probably the most important news of the week, interest decisions. So again, a massive news. I do not expect any cut. No, there will be no cut, but it will be really important to see what the rate statement is. What do you think will be the outlook for the coming year in terms of CAD economy? And that could give us some outlook that where the CAD is going to be going. So if it's good outlook, again, if it's a good outlook, then CAD will rise strongly. If it's a bad outlook, then CAD will fall strongly. On Thursday, we have a massive news of the week, which is initial jobless claims. So last week jobless claims came good. There was less jobless claims than expected. Again, if this continues this month, this week, next week, it will be a really good signal for the market. It will be a really good signal for the dollar, because that just means that the economy is getting stronger and stronger. There's less people unemployed, which is a good sign for the economy, which is a good sign. As an investor, I would love to invest in a country where there's a lot of unemployment rate is low and a lot of people are getting jobs, because that means that country is booming, that country is doing good, and my money will be safe in that country. So that would be a good signal for investors to come in and start buying dollar again. That would be a really important news for us. On Friday, as again, it'll be a slow day, but we do expect PPI news to come out. This is again PPI news for last month, so it'll be really important to see what does PPI hold for us. And if you see, let's see what PPI really means. PPI is product price index. Basically, what it is that it measures the raw and semi-finished or finished product. This is mostly not for as a forex trader. We do not look because it's a forex news. It's most of a stock news, but it is really important because when the stocks are going up, that means the economy of the country is going up. Sometimes when stocks rises, a dollar rises with it. But when stock is all-time high, is also a good sign, because when the stock starts falling, it will also give dollar some kind of a bullish momentum upwards. Because what happens is when you sell your stock, you get paid in dollar, right? So when you get paid in dollar, that means your dollar, that means there's more dollar buying. And I mean, I don't know if you're understanding, because when you sell your stock, you get paid in dollar, so you get more dollars. When you get more dollars, that means dollar value is rising, because there's more and more people buying dollar when they're selling their stocks. So that could be a good signal for for dollar to go up. So as I said, I do think the dollar is going to be quite strong next coming weeks, and we expect dollar to keep rising for next 2 weeks till the trading finishes. How to trade over holidays, guys? I recommend not trading at all, to be honest, because there will be no momentum. Last year, previous year, the maximum momentum you can see is about 10 to 15 pips, because there is no one trading. It's all retail traders around the world trying to trade, which is really, really, not safe, because, banks could just look at and, just move the market one way, and that's it, we're going to get caught out. So I do not recommend trading in at least 2 weeks of December, because there will be no trading, because about 6 to 7 days are holidays, and there's only going to be 3-4 days of trading in last 2 weeks of the last 10 days of trading last of the month. So there's no point really to enter the market and get caught out in the market, market manipulation. So I do not recommend trading any after 18th, after 19th, last 2 weeks of Christmas. Just let it go, because this January is always a big month, because all the investors come a lot stronger. There's low volatility in January, so why not wait for a better month to trade where we can make more money? All right, guys, thank you so much. Again, if you have any questions, please do let me know now so we can help you answer it. All right, guys, thank you so much for coming to the Zoom call. Hopefully we will have a good weekend, and see you guys next week. Thank you so much.